Welcome to the Twomey Stock Market Report. I'm James Twomey, and today's June 9th, 2022, Thursday. Today's update will be on stock sells and potential buys. Okay, let's take a look at our sector analysis. Anything really changing? Energy has crept back up to number 2. It had dropped down to 4 or 5 the last couple of times we looked at this, and certainly it has gone parabolic, quite frankly. So it's hard to jump in at this stage. We do have a play, but in hindsight, you always look at things that gain. Ours is up over 40%. We'd like to have all our money in there. Consumer discretionary is still holding, yet it's starting to be in the negative numbers the last 5 days, but 13 and 10% performance the last 20 in 1 month. Well off the minus 22. Small caps, interestingly enough, is risen up to number 3. More on that later. Real estate, not quite sure why that's up there, but we'll keep an eye on it. Materials, we do have a play in that. Even though it's minus 2, it's been 7 the last 20 days, and of course 8 to 5% increase 6 months to year to date. So the only positive ones have been energy, materials, and then also utilities. Interesting enough, utilities and healthcare are creeping up. They were on the bottom the last few days, and that tells us defensive plays are coming back into vogue, but they're still running negative on a short-term basis. The SPY and the Dow are dropping down. Interesting enough, we're seeing the market either it's going to trade sideways or we're going to have a bump up or bump down, but right now it's basically sideways. A couple of things that are coming up. I saw a statistic today. The pullback on job offers are nearing .com level busts. Okay, what does that mean? Companies are changing their, and probably more technology companies or high rapid growth companies are changing their philosophy, and then they will pull back job offers. I can remember when I was graduating, in undergraduate school. We were all getting job offers, even though it was a tight labor market. I mean, it wasn't a tight labor market, but we were all getting job offers our first semester or our final senior year. It was mostly engineering, so it was always in demand. But not too long after that, people in college were getting offers, and then before they even started, they were getting their offers pulled back. So it does happen. It's not uncommon. Initial claims came out today that reached 229. That's an increase 27,000. Previous week revised from 200,000 to 202. So I don't know. I mean, week to week things vary. Nothing exciting there, but it's certainly the trend is moving in more initial claims being filed. But we'll see. We still have low unemployment. We're going to get numbers out Friday about inflation. Don't be alarmed. I mean, let's take the two scenarios. Let's say it ticks down a bit. They're going to spin that and say, oh, inflation has peaked. Things are getting better. Let's be honest. Inflation, and I've said it before, does not start overnight and it doesn't end overnight. It is a long period before we actually do something about inflation. And all the factors leading to inflation, there's no solutions on the table as we speak. So if it ticks down, it might get a bump in the market. I wouldn't be too concerned about that, and I'm not concerned about trying. It may be that June gets a little bit of a positive bump because of that. I don't know. We'll see how it plays out. If it's down, it's very negative. Market is reacting to negative news, and it takes it on the chin. You'll probably see a decrease. So we'll wait and see on that, but don't put too much into if it ticks down a bit and you start hearing that spin. All right, today I need you to sell SNY and ILF. I'm not sure what's going on with ILF. I noticed some material, and especially raw material suppliers in that sector are dropping. Gold miners dropped today. Get out of it. Get all of it out. We can get back in. SNY, get all out of that. That just doesn't seem to be rebounding. And it may, but there's no sense losing more there. XLE, if you get a drop near 90, jump in. I don't know if we'll see that. We've been stopped out of UBS, NBS. ETFs, we did enter short positions, a startup, what I call startup positions, a third and a quarter. PSQ, the NASDAQ short, SH, the SPY short, and the dog. So put your stops in 12.8, 4.9, 3.5, respectfully on all those. And then I'm watching the small caps due to our sector table. So our updates here, UBS, NVS, we did get stopped out. That's a shame. I think they're very defensive, but I'm not, our indicator said jump out. Copper, we've got a little bit, copper, yeah, I wish. CPG, our energy play up 40.2%. CPG is parabolic, just like XLE and everything else. It is pulling back today. I've got a third of my stop at 9.8. I got another third of my stop at 9.5, and I put the other stop at 9.2 for now. But we'll see if I'm not sure I want to sell that last third until we get the inflection point. XLE, I want to look at that just in case. That is the sector fund, companies and service sector. Today, what is it now? It's trading at 91.4. I said if you can get in around 90, that would be nice. 90.65 was the low. 90.9 was the low today. So, on a pullback, you want to get in. Obviously, if it does pull back to the 89.3, the 10 EME, that's a good buy as well. But we're going to watch that. The relative strength index is pulling back a little bit, so that was it's at 69. It was at 72. Definitely overbought. That's why I'm going to wait on this pullback a little bit. What else do we have here? Oh, okay. For ILF, we're 2/3 stopped out. Sell all of that now. Verizon, it's holding steady at 4. That's our dividend play. SNY, sell all of it today as well. We'll take a 5% loss on that. DBC, it's up 8.2%. That's our commodity play. Let's see what that's doing today. Real time here on the market open here. DBC. That's dropped back. So all commodities plays are pulling back a bit. Interesting. All right. XLU, that's dropped a bit. Let's take a quick look at that. We're still in it though. That's our utility sector and defensive play. And that is holding okay, but it did pull back some the other day. AVD, a third, was stopped out yesterday on our position. Watch that. I'm not sure where it is today, but use your stops as we've discussed and do not. TBT, that's dropped back today, and I had a third stop out actually at the open because I had some profits in there I wanted to protect, but it was probably too tight of a stop. So I added back in. So I'm still holding on TBT, which is the 2 times short of the yields on bonds. As TBF is the 1-to-1 if you want to be more conservative. But anytime there's a drop down and those on the open, you want to kind of nibble at a little bit at that. Don't overexpose yourself, but you want to keep adding on drops on that particular stock or ETF. Copper, that's holding, but that probably pulling back today. CP, that's our material play, right? And that, it's pulled back, but it's got a little bit of a rebound. It's down below our 10 EMA, and it's being holding at our 15 EMA. Relative strength index is 51, so it's still healthy. Stick with that one. MATX, which is our backspace, was our low volume, got stopped out dramatically yesterday. We're out of all of that. That was a big drop. I love that sector. I'm trying to find something that's going to work. They're all low, and this was the better in that sector, if you will. They're all low volume. This is just too much manipulation in low volume stocks. I don't want to be in low volume stocks too often, because this is a great example of what can happen. They can also go up like that, but there's just too much. I'm not saying influence on the market, just that small amounts of trades can really make a difference, and we don't want to be in that sector when it does. We don't want to be in low volume stocks when that happens, and it's hard to get out. Like as that dropped at the open, anybody who had stops in got stopped out, which that was myself. There's no small incremental up or down. There's always big gaps. XLY, that's why we want to stay away from it as much as possible. XLY, that is our discretionary. That dropped a bit. I'm not too concerned about that because it's of our sector table, but don't go overboard because it is a high cost, right? That's holding, and we may be adding to that in the future. All right, so Amazon is not sure where that is. I still think Amazon could survive this downturn, but we'll see. I've got my stop in. It's hanging in there. Our inflection point's there. If you haven't got in, today's a good day to try to get in. And our shorts, PSQ, DOG, SH, they're all about break even. Let's just take it PSQ today, PSQ, and our inflection point still negative. We're taking a small startup position. Our 120 is just starting it hasn't even crossed above on our inflection point, but it did break the Twomey trend track line. So there are some chances that this should take off, but let's just wait and see before we add to it because we need our inflection points to hit. QQQ, the long of that, we are at a relative strength index of 49. So it's coming down, healthy. It's not overbought. So, and it continues to go sideways, and the 9 and the 10 and 15 EMA is acting as support. So we don't want to go overboard on our shorts. Let's see the short version of the SPY. Is there any difference there? That has still not hit our inflection point, and it's being repelled by the 15 EMA. Again, we're in a startup position there, and we're going to hold that startup position for a little bit longer. And the relative strength index on that one is 48, not oversold, which would be 35 to 30. We're going to hold that, but that's a startup position for now. So there is some. Well, let's just look at what the SPY is doing. What is the market doing today? So the SPY it closed yesterday at 411.22, and it just closed 410.82. So it's slightly down. If we had bought back here where our inflection point is, we probably would have got in that next day for confirmation, and we could have been in anywhere between a low of 407 and a high of 417. Let's call it 410, and you're at 410 today. So even though we've had some ups and downs, buyers and sellers, evens on both sides of the equation, nothing has broken up or down. Hard to say. I'm not sure where this is going to go. If I look at the 120-minute, would I be buying here? No. I'd be looking at potentially selling, but it's been every selling has been bought by buying. Every high buy points has been met with selling. Very consistent since May 31st. Very sideways market. Okay. Relative strength index is dropping on the 120, 48.66. And remember, there was a high back at 71 back on May 27th, right around the holiday. So it's the over, and we've seen some sideways since then. So what's happening is, translation, when the market was starting to feel a little bit overbought, even though we had a nice rise right off the bottom here, if the bottom was, let's say, 386, and we went all the way up to 417. Nice bump. But as it got up here, around 400. It's 415. It started moving sideways. The market was getting a little bit exhausted, but not enough that everybody came around and started selling. Enough people were concerned, but not enough to stop buying, but not enough to be wholesale selling. So people are holding their positions. They've got some profit if they jumped in at that last bottom. They feel comfortable that they've got a cushion. Their stops are probably well below, maybe even if it's 50% from where they got in at the bottom, they're going to preserve 50% of their gain, right? So we've got to eat into that supply side of the equation. Right now, there's not enough negative news to eat into that. People are willing to believe and I'm not saying they're wrong, they're willing to believe that a bottom might have been hit. I'm not convinced of that, so therefore the startup positions. If the startup positions we have to sell, we'll have to flip to the long. And the reason why I'm looking at Schwab's small cap, because in our sector fund, right, it was what, number 2 or number 3? Number 3. Let's go back to that backspace. It was number 3. And certainly we want to keep an eye on it. But and our inflection point on the had got hit back in June 3rd, was it? June 1st. I did buy in a little bit on yesterday's pullback to get a startup position to have it on my radar screen, and it's pulled back a bit today. So this one, even though it's been sideways, it's been a positive sideways. I liked it because the sector table. But let's wait and see where this goes. I want to see how this shakes out over the next couple of days. It's odd that the small caps are rising, so I got to look into it a little bit more while the other indices are flat. So we'll take a look at it, but it's been a nice bump, and there may be a pullback that stabilizes, and we want to jump in. So we'll see how it runs the next few days. That's it for the Twomey stock market report. We've had some good runs. There's a couple of losses that were deeper than we expected, but our final inflection point kicked off. That's why I try to use a third. You want to do, and as the market rises, if your stock rises, you want to move those stops up accordingly into our strategies. And when we do take positions, and when our final inflection point kicks off, the 10 crosses above the 15, there can be some sideways move unless the market runs up or down. We have to be prepared for that and may have to revisit. Some of these were sector plays that didn't work out, but we're gonna let's remain with our sector plays for now that are long, and we'll see where that develops the next couple of days. I'm James Twomey on the Stock Market Report for Thursday the 9th. Have a great day.